Well, today I'm interviewing Lindsey McDonald. She's with New American Funding. And I've known Lindsey for several years. In fact, she's done personal loans for me. And Lindsey and I were talking the other day and really talking about what is it that buyers need to know about interest rates, about banking today. Where could they get some help? Not just, you're looking at the media and everything, it looks really depressing because, oh, it's over 7% interest now. What options are there out there? So I wanted Lindsey to go through some of the options that she has to be able to help buyers get into a home now, because you never should wait. If you're in a need for a home, why pay 100% interest to a landlord that you're never going to own that home? All that money that you're putting toward that is just going to their mortgage, not to yours. So, you're not building equity. You're not gaining anything for your taxes. So don't be discouraged about what the interest rates are today, because there are things out there. And that's the wonderful thing about getting with a realtor, to know who their team is, who their partners are that they work with, to be able to put you into some better financing that would work for you now. And, don't marry the loan right now. You're marrying the loan, but not the interest rate, I should say. Interest rates change, and you can always refinance after 6 months if the interest rates are better, or a couple of years from now when they drop down again, whatever happens. Lindsey, don't you wish we had a crystal ball
Oh man, yes.
know what's going on with the market and what it's going to do in 1 to 5 years? Lindsey, how long have you been in dealing with mortgages, doing real estate?
Going on 20 years. Yeah, it's like 19 and a half. So I'll be hitting my 20-year beginning of next year. So a while.
Yeah. So you've seen a lot of different variations with what has gone on for buyers and for sellers in the market through the years. So, Lindsey's not brand new to lending. And I love that, because Lindsey knows and sees what's going on now, and we can compare it back to different times that we've been through. We've both been through the crash. We've been through all these things that, we've seen it. We've seen it all.
Yes. Yep.
So
yeah,
we can kind of give you an idea of what could be possible. Doesn't mean it's definitely, like I said, we don't have a crystal ball, but
right.
So Lindsey, tell us about New American Funding.
Yeah. So New American Funding, they're an amazing company. In fact, last year this year we just were awarded the JD Power Award for #1 in customer satisfaction, which speaks volume. Our clients love us. We take really good care of our clients. We service our loans. In fact, our portfolio is $61 billion that we service in loans. And so that shows the security of our company. And because we service, our rate and our fees are lower, because we don't make the money right at the beginning, at the closing. We plan to make the interest over the life of the loan, or however long they have that mortgage. And so, yeah, we service 97% of our closed loans. So basically everything except down payment assistance. And we have a lot of down payment assistance options for first-time home buyers. So yeah, and it's interesting too, because looking at the market and just, now versus even last year, it's so much more exciting right now. Even though rates are higher, it tends to sometimes scare people because they hear the higher interest rate. But last year, people were willing to pay $100,000 over what the home was worth, where now sellers are more willing to, pay not only a huge price reduction, but possibly even pay for closing costs or pay for the buy down. So we'll actually get to that here in just a minute. But New American Funding, we've got some really great programs. We've got a cash buyer program that was really popular when the market was so hot last year. In certain situations, it's still great now because if you can make an offer and close really quick, 'cause you're a cash buyer, that's where New American goes in and purchases the home. And then we give the client time to sell their home and then they purchase it back from us. So for a pretty low fee. We're licensed in 48 states, so we can help clients in 48 states. Personalized customer service. The mortgage statements come out with the real estate agent's photo with the loan officer, and we're keeping in touch. In fact, we have a co-branded 7-year campaign that goes out. There's like 5 cards a year that goes out to the client, just keeping, the agent and the loan officer on the forefront on who helped them. And, we're just always in communication so they know who to reach out to.
And it's a good reminder for the client to know, okay, if I have any questions, here are the people that I could connect with to answer those questions.
Right.
So really good information.
And then the clients out there building, there's a long-term lock. It's up to a year, so we can lock in the interest rate for 12 months. And if rates drop during that time, we can lower that interest rate down.
That's great. So you are providing a float down if the interest rates do change during that time frame. So see, that's phenomenal in itself to have new construction. And while you're under construction, have that rate locked, because I can tell you when our house was being built, we were worried about rates changing. And we wanted to make sure that we stayed with the rate that we thought we were getting. Nothing's worse than being under a contract for new construction, watching your beautiful home go up. And then, oh my gosh, now the interest rates have knocked us out where we can't purchase. So that gives you that peace of mind. That's a wonderful thing.
Yeah, definitely. And we've got some really cool in-house niche programs. We've got programs that for investors where they don't even have to provide any income docs. They just use the rents from the home they're purchasing to offset the mortgage payment. We've got bank statement loans for clients that maybe write off all their income and don't show any income on their tax returns.
So really self-employed or, and what about students that are just graduating college, getting their degree and starting a new career? What kind of programs might you have for that?
Yeah, no, that's a great question. We can do the loan right away. So if they have a job and we can just show their school transcripts as part of their employment history, that does count towards their employment history. So with the job offer letter, if they have that, we can actually use that even if they haven't started the job yet. So there's a lot of options available for that.
Nice. And I think people just don't realize how many things could be possible and they're afraid to ask. So, I really want to get this out that people understand. Don't believe just everything you see on the flat surface of what the media is saying. There are ways to make things happen for you. And then you can always adjust things in the future. So that's a beautiful thing. So, let's talk about, is it a 2-to-1 buy down, Lindsey?
Yeah, so there's actually a few. There's a few different buy downs. So what is a buy down? There's different types of buy downs. There's like a temporary buy down and a permanent buy down. We'll go over some program highlights, and there's a couple examples in here because it really helps to see the payment difference while we're going over these buy downs. And we also have a little slide on a few things to keep in mind while you might be considering a buy down as well.
Perfect. So what's a buy down?
So buy down is a mortgage rate buy down to obtain a lower rate for a certain number of years or the life of the loan by paying discount points at closing.
All
so
right.
Even if you're seeing the rate advertised maybe at 6.5% or 7%, that's not necessarily the rate you'll get. So like a permanent buy down, it lowers the interest rate for the life of the loan. So a permanent buy down, a client may pay a certain discount points, like maybe 1% buys the interest rate down 0.5%. So a permanent buy down, whatever they buy their rate down to, that is their rate for the life of the loan. Right
Perfect.
now,
And
oh, go ahead.
and a good agent, real estate agent, is going to know this to help buyers navigate this, and to know that these are things that you can ask the seller to pay for. Like Lindsey said, for the last couple of years, the buyers have kind of been extorted by sellers, honestly and truly. The sellers want top dollar. They even want more than what their home is priced at, or the value is. And they have so many people wanting homes that we got in such a feeding frenzy that buyers were willing to just give their shirt for any home that they could get. And, many of you may have been through the situation where you tried to buy a home over the last 2 years and you just got frustrated, because you kept getting beat out of every offer. And how frustrating is it to keep looking at homes and falling in love with a home and you can't get it, or if you end up getting it, it's because you overpaid, you didn't ask for anything, and you kind of got extorted, and now the market is calming down. We're still in a situation where there's not a high amount of inventory. We still are in a seller's market, but sellers are now in a position that they're going to have to make their home a little more attractive to buyers to be able to get the home, to get the loan. And you can ask for discount points to be paid. You can ask for things to be fixed on a house. I mean, how crazy was it that you had to buy a house and couldn't even inspect it?
Right.
Oh my gosh, after, all these years in real estate, that just did not set well with me.
Right.
I want to know what I'm buying. I want my clients to know what they're buying. So
Yes.
what's the difference with that temporary buy down versus that permanent buy down?
Yeah, so the temporary buy down option provides the buyers with the opportunity to receive a payment 1%, 2%, or 3% lower for the first 12, 24, or 36 months.
So they could get up to 3% lower. So like right now we're about 7% interest. And so that could drop them down to 4.
Yes. Yes.
Awesome.
Right. And there's a couple different options where it's either lender paid or seller paid. The seller paid is more attractive because it's lower rates. The lender paid, since it's paid by the lender, we have to make up that cost somewhere. So it's usually in the rate. So the seller paid is the one we're really focusing on.
Right. Yep. It's just, having a good agent to negotiate that, right?
Right. Absolutely. So the buy down options. Okay. So the 1-0 buy down lowers the mortgage payment by 1% for the first year.
Okay.
The 2-1 buy down lowers the mortgage payment 2% for the first year and then 1% for the second year.
Okay.
And then the 1-1-1 buy down is the lower mortgage payment for 1% for the first 3 years. So if we lock them in at 6.5%, the first 3 years, the rate is at 5.5%.
Okay, perfect.
And then the 3-2-1 buy down, which is really killer with some awesome savings, that is a lower mortgage payment for 3% for the first year, 2% for the second year, and 1% for the third year. So,
nice.
And we'll go over
and if interest
examples.
rates change, so a question would be, let's say that you get in at 7% right now, and next year they've dropped down to 5%. Are you going to be able to take advantage of that?
Absolutely. Yep. So
perfect.
What happens is, let's say, so the money for the buy down that's paid by the seller just sits in an escrow account. And so the money is there to make up the difference of the payment for those 3 years. So let's say in 1 year rates drop and they want to refinance, that money is theirs. So it is just reduced off the payoff, or they can receive the money back. It's usually easier to just reduce the payoff. So yes.
Awesome.
And we actually have a 5-year guarantee where that we're running right now, where if rates drop in the next 5 years, we will do a no-cost refinance for that client. So we will help
Nice.
monitor their loan and be in touch with them. So once rates do go down, we'll reach out and offer a no-cost rate reduction.
That's awesome. But there is a 6-month minimum, right? You have to be in the home for 6 months before refinancing, or where are you guys at with that?
So 4 months. They need
4
to make,
months. Okay.
yeah, yep. So as long as they've made 4 payments, we are
Mhm.
golden to refinance them right away.
Awesome. Very good. And I'm assuming, each one costs a little bit more money to get into, right? So that 1-0 buy down, maybe your discount points wouldn't be as much as doing the 3-2-1 buy down. But
That's
again,
right.
it's how willing is that seller to sell that home? And it's going to depend on location. There are still locations, throughout our area in the Utah Valley, in Salt Lake Valley area that there's a lot of competition still. All right. So
Right.
do be aware that it just depends on where you're buying. But, if you're willing to travel a little bit more southward, you might be able to get a home, and get a little bit of money paid towards your interest rate. So really good things there. So
Yeah.
tell
And
us
this
some
is
highlights.
available. Yeah, it is available on conventional loans, FHA, VA loans, and we even have some NAF portfolio programs where it's available on like a jumbo loan as well.
That's
It is
really
a
good.
30-year fixed rate purchase. So the rate is fixed in, and it does need to be a primary residence or a second home. They don't do this on investment properties.
Okay, but you could do it on a second home if you had a vacation home then. Perfect.
Absolutely.
That's
Yes.
really cool.
So yeah, we're going to go over some examples on this because a lot of times it really is communication between the agents and the loan officer getting involved, because a lot of sellers are reducing the purchase price because their homes are sitting longer on the market, and where reducing the purchase price makes a very minimal payment difference versus paying for the buy down. So sometimes it's even worth, hey, let's offer full price or even go a little bit higher maybe, just to ask for enough seller concessions, to make up this buy down. So we'll just go over some examples. This one is just showing a purchase price of $600,000 with a down payment of 20%, loan amounts $480, current rate 6.75, and what their monthly payment is $31.13.
Okay, going on to the next one there.
And on this, we're estimating that we would need about $12,000 in closing costs. And so we wanted to see what the payment difference is if they offered just $588, so a $12,000 price reduction. And it breaks down the payment, saving them about $60 a month is all.
Right. So yeah, looking at that difference, you're even from a seller's point of view, when you have your home on the market and you're not getting a lot of activity, instead of just dropping your shorts and dropping your price, why not offer some incentives to buyers to pay their discount points, which could be included as long as the home appraises, right? Home has to appraise for the price you're asking. Can't overdo that.
Right.
You got to get real with the market the way it is nowadays. Can't ask for the moon and the sun and expect it all. But there are ways that you could offer and entice a buyer to say, okay, we're going to give you a credit of $12,000 towards your discount points. That way we don't reduce the price. You might have thought about reducing your price $20,000. You would have lost all that money. So you're able to make a little bit more, and the buyers that are able to benefit from that. So there's things to think about,
Yeah, absolutely. So actually maybe go back just one page.
Oh, there we go. Okay.
Perfect. Yeah.
Too many
so
buttons.
This one shows, no, that's perfect. This example is of a permanent buy down. So this is where we're taking that $12,000 and buying their rate down from 6.75 to 6.125. and you'll see the payment difference. It's $194 a month. But the cost, when you do a permanent buy down, let's say interest rates drop next year, the cost of that buy down goes away. You don't get it back. And so we wanted to run the break even point. So technically, if someone was in their home for a little over 5 years, they would break even on the cost of, that permanent buy down. So this helps their payment a little more than just that price reduction.
Mhm.
But it's not as great as that temporary buy down.
Okay. So yeah, that's a great point because, my first thought would be, oh, I'd love a permanent buy down. But with the temporary buy down, it's going to depend on what the rates are doing, right?
Right.
So yeah, things may change in a year and make it even more advantageous for you.
Right, exactly. And this is an example of a 2-1 buy down. So if the rate was 6.75, the first year it's going to be 2 points lower. So you'll see at 4.75, that monthly difference in their payment is $609 a month cheaper for that
That's
first
huge.
year.
That's
So,
huge.
right.
Yeah.
Especially with these home buyers purchasing a home, the payment gradually going up helps them so much, because when the first couple of years is usually when they have a little more of expenses and
Mhm.
and then we're very hopeful that rates will go down in the next year or two. And so this helps really reduce their rate and their payment so they can buy that more expensive home they're looking for and not have such a high payment.
Right.
And one thing I did want to note is we do qualify them at the note rate. So if the note rate is 6.75, that
Mhm.
is what we qualify them when we're underwriting their loan.
Right. Okay. Well, and
So this,
that protects the lender to make sure that you're going to make your payments. You can afford your payments, right?
right,
But then
right,
we're going to find ways to give you savings during that time frame in the beginning of the loan. And for younger couples that are just getting started in their business or their career, or they have young families, getting in with a little bit lower payment gives them a little more money for food, for vacations, things that they want to do, and then gradually, you would hope that you're earning more money through the years.
right.
So maybe next year you get a raise, and then you're able to compensate as the interest changes if we don't have lowering interest rates, right?
Right, right.
Yeah.
Yes. No, great point, Michelle. So yeah, then the
Right.
second year goes to that 5.75 and then it caps out at the 6.75.
Mm-hmm.
The 3-2-1 buy down is really killer. So it does cost a little bit more because
Mm-hmm.
obviously the payment difference has to go into that escrow account. So this would cost about $22,000. But you'll see that first year, the rate is at 3.75, saving them $890 a month on their mortgage payment. And
Big
then the next
difference.
year it goes up to 2504, 2801, and then we're capped out at that 3113. So yeah, this one has been very popular.
Mm-hmm.
And the seller buy down does have to be paid for by the seller. Um, it, let's say the seller contributed 20,000. The only other party that can contribute is like the agent. The agent could kick in a little bit, but
Mm-hmm.
on the seller buy down, it can't come at all from the lender because that money, goes into escrow and it sits there.
Right. Right.
So yeah, that one is a huge savings and is really helping a lot of clients get into homes because of such that lower payment.
Well, and let's just say, okay, we're roughly around 7%, just an average right now. Now, of course, it depends on what your credit rating is, your credit history and all, but let's say it goes up to 10 next year.
Right.
You're locked in for 3 years that you're saving money, and they're not affected by the higher interest rate if you waited to buy a home in the future.
Right.
I've seen interest rates above 10% in my 25 years in real estate. And I know even back in the 80s, they were 18% interest. So we never know what our lovely government's going to do with our interest rates, right?
Right, right.
So, if you have the need for a home, why not get into it today and not wait until, let's wait for the next 2 years to see if interest rates change. Well, during that time frame, you've lost equity. Across Utah, the average in the increase has been about 13% across the entire state of equity buildup every year. And we don't see that changing. Utah is kind of a buffered area. It's not California, it's not Florida. We're a different situation where even during the crash of 2008 and 9, Utah did pretty well compared to other states, because I was in another state doing real estate and it sucked. So,
Right.
So don't be afraid to look into what the possibilities are just because you see that the rates have gone up, because we don't know what tomorrow's going to bring. So, like Lindsay said, if you're buying a brand new home, you get locked into a rate. If it does drop, they do have that guarantee of being able to drop down that interest rate for you. So there's a lot of good things there. So tell us all the benefits for our buyers.
Yeah, so there are a lot of benefits. So there's lower upfront payments, obviously, for those first couple of years, which allows the borrowers to ease into the payment as their income also increases. Any unused buy down funds are refundable with the refinance, or if they sell the home. If they sell the home in 2 years and they still have money in there, that money is theirs and goes back to them.
Nice.
Seller concession is used for buy down is more beneficial than a price reduction.
Oh, absolutely. For both parties, really.
Yes. Right. It makes the homes more marketable. So for your sellers out there as well, we can help advertise some of these programs to help the buyers. And then the buy down cost is less expensive, obviously, than price reductions. Because
right.
I mean, you really would have to do some large price reductions to affect their monthly payment.
Right.
It's nothing like a rate buy down.
Absolutely.
And the market stays strong too without the price reduction. So like I said, the seller pays the buy down. The seller paid concessions don't need any special wording on the addendum. It can just state seller has agreed to pay X amount towards buyer's closing costs.
Okay, good to know.
We do qualify them at the full locked rate. So it's not like we're qualifying them off that lower interest rate. We do make sure that they fully qualify for that fixed rate.
Right. So your debt to income ratio has to be good enough to get this loan first. So
Right.
That is a caveat.
Right. That way, in case rates don't go down, we know you can make your payment.
Yeah, absolutely.
And then we're really good at working with the agents and the listing agents just to go over, explain the buy down options, because it's always been around, but we just weren't utilizing it. We didn't need to.
There wasn't a need back then. Yeah.
Right, exactly. And then any additional concessions can be provided by the seller as long as they remain within the limit of third-party contributions. So different loans have different max seller contributions that can be applied. So for example, on a VA loan, the seller can pay up to 4% of the purchase price towards the buyer's closing costs.
Okay.
For an FHA loan, we're at 6%. So 6%, that really helps with that 3-2-1 buy down because of the max interested party contributions being 6%.
Right. Yeah. So that gives you a little more opportunity to gain more to be able to put towards your discount points. So
right.
Good deal.
And then conventional loans, they do have limits just depending on the loan to value. So if someone's putting down like 3 or 5%, basically if it's above 90% loan to value, it's only 3% that the seller can pay, but still that's there's a lot could be done that with the 3%, even the 1 buy down. So, and then
Well,
as the loan to value drops, the interested party contributions raises from 6 to even 9%.
yeah, so, be sure to ask when you're getting qualified for a loan. It, most people, you want to shoot for a conventional loan. Of course, you've got to have a little bit better credit. But we have these loans, the VA or the FHA loan for those who need a little bit more. And you get a little bit more for a percentage of what the seller can contribute. And then for our veterans, we do have VA loans that are available for our veterans. But sometimes a conventional loan or a VA or an FHA loan may be a better option. Who knows? Lindsey knows. She can look at the numbers and see what would work best for you, for your circumstance. So if you are a veteran, I'm actually certified with a military relocation program, and I would love to work with you because I come from a line of veterans, so I'm very familiar with that. And I know Lindsey has great veteran programs, but look at all the options, weigh out everything and make sure it's going to work for you. Okay.
Yes. And we will definitely educate the buyers on their different buy down options. We have a really cool spreadsheet through the mortgage coach that will help compare side by side the options of, hey, if we go conventional with a small down payment versus FHA versus VA. So we can kind of compare all of those and the different buy down options side by side.
Nice.
And then, yeah, like we went over, we've got that 5-year guarantee. So they are offering that. We're doing it between now and the end of the year. I wouldn't be surprised if they extend it. But because we service the loan, we will monitor the loan. So next year or the year after, whenever rates do go back down, we will reach out to the borrower and offer that no cost rate reduction.
And you said something there that I think people need to be aware of. You service your own loans. So many times I've been at the closing table and, we're closing and you're closing with a certain lender, but your payments are going to have to be to a different lender. And that confuses people. And sometimes that causes some issues. So I like the fact that Lindsey's still my girl to take care of my loan. And when I call her up and, the things I get in the mail, I get my statement, it has her on that. I'm not being passed off to somebody else. Right. So I think that that's a good value there.
Yes, definitely.
So, well,
so yeah, that's it on that.
Awesome, Lindsey. Well, let me stop for a second. So thank you so much for talking about these buy downs, because I think that a lot of people need to know this and they need to understand what options there are. So I really appreciate you doing that today. Do you have any other things that you think that buyers would really need to know about right now?
There are still a ton of different grant options out there as well. We're really good at working with we've got different cities and even state funding that offers free money for first-time home buyers, or if it's been over 3 years since you've bought a home. So, yeah, like I said, I've been in the business for almost 20 years, and I look at every client situation different. Even if your credit is maybe a little low, we will help work with you to get it to where it needs to be to help you qualify for a home. So we're really hands-on with our clients and want to build, have them to be clients for life. So.
Well, and you can access other programs from other places too. I know you do some brokering as well. So, I had asked Lindsey about a 40-year loan. And even though, some companies don't do it, some companies do broker loans to other companies so they can find those deals for you. So, what other kind of things do you see out there, Lindsey?
We've got programs for clients that may have had a bankruptcy 1 year ago or only have been self-employed for 1 year. The rule of thumb is most lenders need you to be self-employed for 2 years and have 2 years of filed tax returns. We've got programs that will do it with only 1 year of self-employment. So yeah, no income loans, the 40-year option. There are ARMs available as well, adjustable rate
Mhm.
mortgages. The pricing hasn't been as good on those as a 30-year fixed, but we can definitely look at those. There's so many different options. It's just, running the different numbers and seeing what makes the most sense to have the lowest payment and the lowest out-of-pocket costs.
Right. And that's the key. And like I said, you just have to ask. Never be afraid to ask questions. Never be afraid to ask questions. Really get some deep understanding about what you're getting into. And Lindsay's always open to answer any questions you have. So don't be afraid of that, you know. So, well, thank you,
Yeah.
Lindsay. I really appreciate you being here today and helping me just kind of get the word out about what's possible. And, if you have any questions, if you'd like to call Lindsay, I have the number in the subscription for our video here. And you can always email her. What's your email address, Lindsay? Off real quick.
Yeah, it's just lindsay.mcdonald@nafinc.com.
Okay, and Lindsay is with an SEY, and she is a McDonald, not a MacDonald.
Yes. That's right.
So perfect. Well, thank you so much. I appreciate your time today.
Yeah, you bet. Thank you.